Hey everyone, welcome into Smart Money Sundays. Hope you're doing well. Just going to start off by letting you know that I created this video, or sat down to create this video earlier, and I got about halfway through it, and the application quit unexpectedly, and I lost the video. And so I'm not too thrilled about that, to be honest, and I'm kind of flustered. So I'm just going to kind of breeze through what I'm looking at this week. I apologize, and I'm just very annoyed about what happened there, because I was putting together a great video for you guys. But nonetheless, right, Euro USD. We'd like to start off on Euro USD. Obviously, we talked about last week trading down into this area of manipulation here that ran liquidity, sell to buy. Right, and we had this as kind of internal liquidity inducement. Where Friday we obviously ran the lows, sell to buy, kind of break structure higher. So for me, I really would like to see this thing trade at least up into this hourly up close. Remember, we were talking about price trading up into potentially higher time frame supply up here, this lower high that produces lower low, right? This kind of A into B into C retracement phase on the higher time frames, A, B, C, premium continuation. Right, so I think that is very much so still on the cards for Euro USD. And so based upon what happened last week, kind of forming that counter trend, right, running out the liquidity, then the break higher, I think we should be good for retracements intraday, right, for continuations higher. Now, I like this level here that I have marked off. Why? Because we traded into supply here. You can see the reaction. Supply fails, breaches, flips to demand. All right, so I kind of want to wait for London session. I want to see us potentially push higher, and then London have that run on liquidity, the mitigation, and the continuation, the follow through. Right now, we obviously could trade deeper into this level. That would be completely fine too. I just, keep that in the back of your mind. I wouldn't expect that, but it's certainly a possibility. Right, I kind of like this doji candlestick. The 1 hour 50 EMA here is nice confluence. 9,800 whole number. All right. Same applies kind of across the board on these dollar pairs. All right, GBP USD. This is the level talked about last week in this rectangular box. Took a lot of heat on it, right, but ultimately didn't hit stop loss. Got a nice reaction. All right, so I'd like to see this thing, all right, at least breach this structure here. That would be great. The counter trend. Get above that, and then kind of same as on Euro USD. Right, we have this nice candlestick here. Right, dig down into this, maybe the body of that, and then continue higher. Right, ultimately, remember we have that level of interest, right, above this descending liquidity, that 90-minute up close here that I do think price can dig into. As some similar situation here, A into B into C, higher time frame retracement, run the pool of liquidity, finally account for, mitigate orders that have been left open and draw down, right? So for me, my bias is kind of, retracement continuation here, counter trend, right? As long as we're understanding the inherent risk behind trading counter trend, we are part of that counter trend momentum phase of the markets at the moment, right? Which makes things a little bit more difficult because obviously we like to be trading with the trend. AUD USD, we're getting that higher time frame retracement that we talked about last week. Right, kind of want to see that premium pricing, taking back up into this area where we ran the lows, ran the highs, break lower. Right, obviously the level was that 1 hour where we have demand, the reaction, demand fails, flips to supply, was never retested. Right, digging back up into a nice level of premium on the Fibonacci, kind of that 78.6. Getting back up into there, looking for shorting opportunities. Obviously, now that we've run the lows, broken structure. The upside, if we do open up and push lower, right, potentially into the body of this, maybe run out this wick, right, just get a little bit of an equilibrium or discount, we can obviously take that thing higher up into our bearish POI. And the same really applies to NZD USD. This is our higher time frame level here, right, where we ran the lows, ran the highs, broke lower, right? So we're still within this area of interest, this trading range. But we still have some potential room on AU to the upside, so something tells me likely NU might run this high again. But we could be seeing somewhat of the same model, right? You run the lows, right? You run the highs, and then you break lower again. Exactly as happened here. Run the lows, run the highs, break lower again, right? So potential repetitive theme happening here on NZD USD. All right, USD CAD, I'm just going to be watching this one, not extremely interested. All right, we had the range here. All right, we ran the lows, met that objective, ran the highs, met that objective, pushing lower again down into demand. Remember, higher time frame. Higher time frame, this is really the structural point, higher low that produced higher high. So we're kind of trading into that last point of return. Obviously, if we breach this level here, then we could be trading deeper down into old market structure 3200. Right, so potential higher time frame retracement into either there, potentially here. All right, but for now, we have to assume that this structure is going to be respected, right, and have another higher high until we finally want to have that overall retracement and the continuation. All right, so hopefully that makes sense. All right, again, it's that 30-minute down close candle here that I'm first and foremost interested in. It actually might be the hourly. All right, this area right here, obviously we could breach lower down into here, run this out as internal liquidity induced. I just don't really like these lows here either. I don't really see much of a liquidity run here. It's relatively equal lows, so we could even run these out, right? But we have to respect the market structure or understand that market structure trumps things of that nature. All right, so it'll be interesting to see how this one plays out. Ultimately, this will be the draw on liquidity once we decide to turn bullish again, and then we have our weekly equal highs. All right, way up here. All right, those will be run out. It's just a matter of when. All right, so that's UCAD. Let's head over to these yen pairs. Don't really see much on USD Swissy at the moment. So Swiss franc Japanese yen is kind of where I want to start. All right, obviously this is the level that was given out, has been given out, talked about for quite some time. Turning up into this up close, right? This area of supply where we ran liquidity, right? With these lows here as the next draw on liquidity, right? The next objective, right? So you can see as we trade up into that supply, the massive reaction that follows through, creating that kind of lower high here. So simply looking for a retracement. Obviously, we can dig higher up into here again, right? But I also kind of like the lower time frame, right? I like the lower time frame here, right? This nice up close here, trading up into doji candlestick here, all right? And we have the inefficiency. So this is more or less my POI, more so here than trading back. I don't really see a need to trade up higher up into here before spilling over, because I think the next objective, they're more interested in the sell side liquidity resting beneath these lows here. All right, so simply looking for a pop up, a little bit of a premium and a continuation. And the same really applies across the board on these yen pairs, same levels, right? You have the inefficiency here on Euro JPY, digging up into this, continuation lower. All right, at least down into this down close, right, as an initial target. All right, so pop up, continuation lower. USD JPY, right, pop up, same, again, everything looks very similar here on